Hello again. So before we get into our first pattern and explore how to pick our entry and how to look for entry signals, we have to cover one more important concept of not only reversal trading but trading in general, and that is that we have to make sure that we have high probability entry setups. At the same time, we have to make sure that we avoid some of the most common problems. And as you probably know, one of the big problems many traders have is they always get into a trade too early. And especially since we are reversal traders and transitioning traders, this is a big problem that many traders always try to pick tops and bottoms, and they short once price is still going up, or they go long once price is still going long, always trying to call the absolute top and the absolute bottom, which is very dangerous for your trading account, and you will most likely end up losing a lot of money. And in our trading, we use a tool and a concept. So let me introduce the 20 period moving average here for you, and there's nothing magic about the 20 period moving average, but it is a way of filtering our trades in a very effective way. So here we click on indicator, here you type in moving, then here you just choose moving average. You can see already here it is, and it is on your chart. We have to make a slight adjustment. We go to inputs, and under length we type in 20. Let me make it a little bit bolder and bigger so that it stands out. And now you can see that we have the 20 period moving average on our charts, and this is not only a way of filtering our trades, but it also helps us to identify good markets, and it's the first step into market selection, but we will get into that later. So as we said already, we are always looking for nice trending markets, and we are always looking for trends where we have multiple waves. So here's a good example, here's a good example, here as well. And you can see that during such a trend, the moving average or price always stays on one side of the moving average for quite some time here. You can see that once we go up, we stay above the moving average. When price goes down, we stay below the moving average here as well. But here, on the other hand, we don't have such a nice trending structure. We have lots of back and forth, very deep pullbacks, and in such a case, in such a market, the moving average falls right into the middle of the price action, which is a good indication and a good way of analyzing or finding good markets. So the moving average is our first tool when it comes to market selection, and we will get into that topic later in more detail. And now when we are looking at the moving average, what we want is we always want to see a very strong break of the moving average. So the problem is that many traders who see such an uptrend, they always try to short. They see the individual pullbacks here in between, and they want to call the top, because if you can get in a reversal trade very early on, you can possibly have a very large reward to risk ratio. But at the same time, such a trading approach leads to a lot of losing trades, a lot of problems, because you're always trying to call the top and the bottom, and trends can go on for much longer than most traders think, and it's a very dangerous way of trading and has to be avoided. So that is why we use the moving average, and we only enter a trade, especially when it comes to our first pattern, which we will explore in the next video, which is the swing reversal. We only look for trades once the moving average is broken, and what is even more important, that we always need a very strong break of the moving average, where we can clearly see that the momentum and the direction is changing. And later on, when we go into the trap pattern, and also when we go into the triangle pattern, then we will see that we also need a momentum shift candle or a momentum shift sequence, which just means that we need to see that price is really accelerating into the new direction, and it's not just crawling along. So the momentum shift is a very important feature, and if you remember the last video where we look for those local structures and the local reversal structures, we always need a signal that the structure is broken in a very significant way with very high momentum, and this is a very big odd enhancer, and it can improve the quality of your trading in a very significant way. That's why it's always important to look for those high momentum breaks. So in this case, you can see we are moving higher, we have higher highs and higher lows. Then we move here into this previous market top here, and then suddenly reverse to the downside. And you can see here, price is picking up the short momentum. The momentum to the downside is increasing significantly. You have very large red candles. You can see then at that point we close below the moving average here with a very large selling momentum candle, and that could have been our entry. We will explore that in the next video and in the next module in detail, but you can see that how such a momentum shift is foreshadowing a potential reversal. Then you can see we reverse, we go down here, very nice trend, and then here at the bottom you first have a premature break, and that is important to understand that we only make trading decisions when the candle is closed, price closed here below the moving average, whereas here the first attempt was a very long rejection bar. You can see that price moved up into the moving average, it found resistance, it turned down, so we are not making mid-candle decisions, we are always waiting to get a full close on the other side of the moving average. Then here in that case it's a little bit tricky. You can see that the next candle would have closed above the moving average. It is not ideal because price has just moved here sideways for quite some time, and we will explore that pattern later on. If you see that price is just moving sideways here, this gives the moving average a lot of time to catch up with price, to move down, to meet price. So it is not ideal, and in that scenario you should have waited a little bit longer to be on the safe side. You can see that the momentum to the upside is increasing here on the next candle. We have a strong follow through then afterwards, and then you can see how the momentum shift can play out. Here's a different pattern which we will explore in a later module. It is the break and the retest of the moving average. You can see that we broke above the moving average, we retested it, we found support, we pulled away again here with very high momentum. So another high momentum candle and a very interesting signal here as well. So here's another very interesting market setup. You can see we have been in this downtrend. The price stayed below the 20-period moving average for quite some time, and then here again, that is what I highlighted previously. Price just moved sideways for a long time here. That gave a lot of time for the moving average to meet up with price. So in that case, you can see that here we have a little candle that is crawling above the moving average. That is not a strong signal, that is not a momentum shift. It is not yet showing that price is finding upside momentum, that we are actually seeing a reversal. But then here on the next candle, you can see that we suddenly have a momentum shift, a momentum candle, which is confirming that we are moving into the new direction. You can see at that point we are also breaking this, what we call a flip zone, has been support, resistance, and now we are breaking it. Here again, then the other pattern, you can see that we come back into the moving average, we come back into the support resistance area, we retest it. You can see here we have another momentum candle indicating the upside momentum. So you can see again how entering a little bit later, we don't try to pick the absolute top or the absolute low of a reversal trend because that's the most expensive part of a reversal trade. So we're always trying to look for a little bit more confirmation, a little bit more context and confluence to our trades. And that we can achieve by using and waiting for this momentum break, the momentum confirmation, once we can see that there's actually a reversal happening to the other side. And so entering a little bit late is not bad, and it can greatly improve the quality of your trading and of your trades. Then here another very nice example. You can see here we are moving higher. You can see we are making higher highs and higher lows, but the moving average is just falling in the middle. We don't have a very nice trend structure, and then the following reversal is also not as strong. Then we have a nice trending structure again. We have multiple trend waves. We see a lot of bullish power. We are pulling away from the moving average. And then here, first we have our local structure, our double top here. And then suddenly we see a sudden move and an injection of selling pressure, a selling momentum. You can see that 1, 2 very large candles. We break below the moving average. We break here also below the previous swing point. Let me mark that for you. So you can see that we have a little bit here, previous swing point, we break below it, we came back into the area and also into the moving average. We retested. In a later video, I will show you exactly how to enter such a trade, but just to give you a little bit of an idea, there are 2 momentum shifts happening. The first one is after this break of the moving average here. It is not good enough to just enter here on the first candle. Although this is a large momentum candle, we are still trading well above the highs, and it could be that we are just seeing another pullback, another retracement, and we could see another run here. We could see that price is making another trend wave higher, but here you can see that we are now breaking also the previous lows, and that is a very different scenario here. under the 20 period moving average, and also here once we pull away from the 20 moving average after the successful retest. Again, a very nice pattern and a good trading opportunity. Then here again a few nice examples. You can see that we are moving down. Here was a little bit of a tricky market. You can see we shot above the moving average with one straight candle. Although we don't have a nice trend structure, if you're taking it, sometimes those trades don't work out. That is not a big deal. We are not here to get a 100% win rate. We are just trying to find high probability trades that we can take over and over again with a good expectancy. So if you see such a large candle, you break above the moving average, you take it, you get a loss, you just move on, you wait for your next chance. And the beauty of those reversal trades and this method is that you, as you will see in a later video, you almost always get a re-entry opportunity if your first setup fails. So you can see we keep trending lower. We have another double bottom here. You can see we try to break the moving average here in that case with the wick. And if you remember, we don't do mid-candle decisions. We always wait for a complete close above the moving average, which happened one candle later, and that will already save you a lot of trouble if you just wait for the full candle close above such an important area. And it's not only about the moving average later. When you see you trade triangles, double tops, double bottoms, head and shoulders, you always wait for a confirmed and a very strong break of the pattern, and that will already improve your odds and your trading quite significantly. So you can see again, and another very important pattern here, depending on how we draw it, has been resistance, then we came back into it, we retested it as support, and then we have another important candle here, another momentum candle confirming the upside movement. And you can see how we can get into such trades, and we will look into the signals later on one by one. But for now, it is just important that you understand we stay away from tops and bottom picking. We always wait for the clear sign that the momentum is changing, that we are getting a momentum shift, and that is a great odd enhancer in our trading. Here as well, we just keep following the price action. You can see we are making higher highs. We are seeing here that price is making something like a rejection here with a very strong wick. And then here again, we have the close here above. We have the close below the moving average, although this is just barely closing below the moving average. Nevertheless, that is very strong selling pressure. If you don't feel comfortable, you just wait one more candle to see that price is actually following through. We are pulling away, but again, a very interesting momentum shift, a momentum candle here after this trending pattern. And here another interesting market that you should be aware of. This pattern happens quite often. You can see we have been moving up, and then price just moves sideways for dozens of candles. And you can see it gives the moving average a lot of time to catch up with price. And then eventually here we have one candle where we close below the moving average. Obviously this is not a momentum shift, this is not a momentum candle. We would not enter such a trade after such a long consolidation, because it's not a momentum shift, and also we are not pulling away from this pattern. Whereas when we just follow price action a little bit longer, you can see we make another trend wave, and then here it's a very different picture. You can see here we are seeing the momentum shift, the momentum candle, where we are pulling away from the top. We see a lot of selling pressure suddenly entering the market. And again, we are entering late, but we are entering with a lot of context to our trade, a lot of confirmation, and this will help you trade with confidence and not doubt your signals as much when you can see that we are not trying to predict a market turn, but we are actually just following price action. And then here again, we can see price is retesting the moving average 1, 2, 3 times. And then here we have a very long pin bar. This is not a classic momentum bar, but it is a rejection pattern where you can see price moved up significantly against this previous trend or against this previous candle. Then price was pushed down all the way here until the bottom. So if you just read the market context, it is another very interesting confirmation that we are not having enough buying power to move price higher, and then it foreshadowed this reversal here to the downside. And let's look just at 2 more examples. You can see that we are here in a downtrend. Again here, it is not an ideal momentum break. You can see we barely make it above the moving average, and so that is not an ideal momentum shift, a momentum break. Once we see that price is continuing its downtrend, you can see we are having a local structure here, a double bottom, and you will see that is something like a squeeze pattern, which we will explore in module 3. And then here suddenly we have a momentum shift, which is happening, a large bullish bar showing the momentum, the bullish momentum picking up. We come back into the moving average, we have another momentum shift. Although we move a little bit against it, you can see price kept trending and it kept following this uptrend here. So you can see that this shift and this trend direction shift is very different from what we have seen here previously. Again, we are not trying to pick the absolute top or the bottom here at this area, because it is very likely that we can see just price continuing to make new sell waves, new downtrend waves. So we are always waiting for a clear reversal sign with a very strong momentum shift. Then you can see price just keeps trending, and then here we are moving in this market top. We have seen that previously it is a local structure. You can see here we do have some type of a break of the moving average. It is not as strong, so it is questionable if this is a good entry. We don't have the strong break, but nevertheless, if you decide to enter here, there's nothing wrong with that really. You can see price moved back against your trade, depending on how you set your stop loss, which is something that we will cover in a later video. You would have forced out, or you had another chance to get out for a smaller loss or a small win. And then we have this structure here now, a local structure, a triangle or a wedge, whatever you want to call it, where we have now this bottom here. You can see that even when we extend it, it has been a swing high, a little bit of a retest, swing low. We never break below this area, but at the same time we are making lower highs, which is clearly showing that price is not having enough power to break higher. Most traders, they will enter somewhere here already in the middle because they're seeing the lower highs, but we just wait until we see a confirmed break of this structure. Again, the momentum shift happened here, a very big injection of selling momentum here with this large candle where we break below the lows, we close below the lows, and then we have a short-term trend here to the downside and a very interesting trading opportunity. And I think that is enough examples for how we use a momentum shift, why we avoid picking tops and bottoms, which tools and what to look for in a classic reversal and a momentum shift. And in the next few videos we will go over finding the real entry signals, how to time the trades, and then also we will look into re-entry opportunities with other patterns as well. Thank you for watching and see you in the next video.